Hey everybody, welcome. It is Mark Coe for the 18th of April, 2017. I want to talk today about being in a position um, to experience the upside. This one I want to talk about being in a position. It's a very common question I get in, and I realize why I get the question. A lot of the people that I have talks with, they're very short term in nature, very short term. And in being so short term in nature, what they're always focused on is tell me the exact time something's going to happen. Tell me the exact time to enter so that I can experience the exact movement. That's a very challenging thing, and one thing that I don't even attempt to do. What I attempt to do is to put myself in a position so that when things like that happen, you get to experience it. I'll give you an example. So sterling yen, everybody knows pound had a big move overnight during the U.S. session. Pound yen moved from the low 136s up to 140. You saw a lot of stop covering, a lot of positional trade, but it was all sparked out of the UK with news. And here's what I want to talk about in relation to this trade. My daily model, if you haven't checked it out, please do so. But my daily model last night at the close enters a limit order to buy sterling yen. That's what the model was trying to do. So at the close of business on the 17th, as you walk into work on the 18th, the model is trying to buy sterling yen, and I'm highlighting it right here in this red line, 136.55. So that's what the model is trying to do. Now, I'll give you a little example of what the model is looking at. The model is trying to get position for a trend move. That's all the model is trying to do. And it has a point where it's wrong, and it has a point where it says, no mas, I can't take it. But until that happens, the model attempts to stay positioned. So as we walk into work on the 18th, the order goes in. The model is buying sterling yen on pullbacks. So here's what happens. Overnight, obviously, the model or sterling yen's trading above 137. And as we approach kind of early morning Europe hours, you get this news out of the UK. The market pulls back. It allows for entry. Now, here's what I'm talking about, getting positioned to be rewarded. Getting positioned does not mean that the model knew, hey, this thing's going to see 3-4 big figures higher today. I have to own it today. It's not. What the model is recognizing, what we try to recognize in our trading, is spots that are advantageous to look to put risk on. And that's what we are. We are controlling our risk. It's about managing our risk. So if you think about even on a short term, take the model away. Just think about this from a short term perspective, right? So what you could have seen in sterling yen. What you see in sterling yen is the ability to recognize a spot where the market, not me or somebody else, but the market's telling you, I'm not going to take sterling yen lower. So this is yesterday, 17th of April. The market tests new lows, 35.55, 35.60, and it rotates off of it. And what that does to the short term, it takes out all these sellers. It takes out all the last leg of sellers. So as the market's trading above it, it makes a lot of sense from multiple time frames to look to buy pound yen pullbacks. This is not saying that you knew what the news release was going to be, that you know there's going to be news out of the UK. It doesn't. What it's talking about is recognizing what the market is able to show you, which is that buyers controlled the market at the lows, and then they pushed it through the most recent sell level. And so what we're focused on is putting ourselves in a position. So I realize this is a trade that just happened to see spectacular follow through on a daily basis, but it's the exact fundamentals of what we look at across multiple markets every day. It doesn't matter whether one trade has a result of plus 400 ticks or one trade loses 40 ticks. It's about putting yourself in a position to profit. That's what you're doing. You're analyzing the market, looking for opportunities where you can say, I can control my risk and I want to let this thing work for me. That's what you're trying to do. Today's a special day where you saw obviously very exaggerated upside. So anybody that's long the model sterling yen trade, they're going to be very happy. But that's not what it's about. The model also stopped out of a sterling yen a couple weeks ago. But the difference is it lost about one big figure or just over one big figure. Today, it's almost 3 big figures in the money. So it's about reward being bigger than what you risk. And that fundamental aspect doesn't change across trading, right? So what we're constantly doing is saying, who's controlling this market? How do I want to be positioned? And how do I get positioned? And it doesn't matter whether it's on a daily basis, a shorter term time frame, I myself have preference towards more of a swing type of outlook, meaning I think there's a lot of potential in looking for 2, 3, 5-day type swings, even a couple week swings. It becomes a more challenging endeavor to time things to the minute, to the second, and it's just a game that I don't really concentrate on, but it doesn't change the fundamentals of how you look at it. So it was a nice day. We're also on the model. We are also long euro yen. Euro yen not doing nearly as well. Let's take a look at euro dollar. When I referenced the model, euro dollar is a great example. The euro model, the daily model, got long euros a week ago. It got long on the 12th of April. This day, got long right here. Sat sideways. There was actually a comment from President Trump saying the dollar's too strong. Saw this spike. The model then exited, right? So it's not about that you're seeing every trade do these phenomenal results. It's about putting yourself in a position and managing the risk. So this euro model actually exited, and now we see it several days later climbing. Okay, but from a short-term perspective, we have the ability to come into the market and look and say, here are the levels I'm focused on. This is the area, 106.15, that the buyers are stepping into the market. If the buyers take out 675, it's a new frame of reference. It means there's enough upside pressure to continue to focus on higher targets, higher prices, and that's what euro showed us today. So that's an example of one where the model didn't experience it, and an example of one where the model has experienced it in a big way. It's about putting yourself in that position, and that's what I wanted to focus on today. So for the 18th of April, hope everybody's having a great day. Hope you have some of these trades. Hope you guys are doing well, and we'll talk to you soon. Cheers.